people have the job and they both earn a salary of $100,000. One of them moves to Texas, where there is no state income tax. The other person stays in California, which has a tax rate of 13.3%. After 10 years, it is clear who has more money saved. The person in California has money saved. In fact, the difference is huge. Here is something that people do not usually talk about when it comes to states with taxes. The tax that you do not pay to the state you will end up paying else. Sometimes you even pay as much. If you are thinking of moving to a state in 2026 because you saw a tax map on TikTok, you should know this verse. The thing is, states with taxes have hidden costs that are taking money out of people's bank accounts. These costs are taking money away faster than any state government could. Texas and California are examples of states with tax rates. Texas has zero state income tax while California has a tax rate. Now a lot of people are moving out of states with high taxes. New York, California, and New Jersey are examples. They are heading to places like Florida, Texas, Nevada, and Tennessee. The idea sounds great. You get to keep more of your money. You can live a life and build wealth quickly. After 6 months, things get real. Your property tax bill is huge. Your homeowner's insurance costs as much as before. You have to drive 40 minutes just to buy groceries. Somehow you are saving money than before. Here is the thing. Low taxes do not mean costs. It just means the costs are hidden else. If you do not know where to look, you will move to a state and still end up broke. So before you sign a lease or buy a house, I want to tell you about 4 costs that people do not talk about. When you see these costs, the whole low tax dream starts to fall. The body for hidden costs. Cost 1. Property tax eats you alive. Texas has zero income tax, which is something everyone knows. What people may not know is that Texas also has some of the highest property taxes in America. The average rate is 1.8%. In some cities like Austin or Houston, it is over 2%. So what does this actually mean? If you buy a $450,000 house in Dallas, your property tax will be $8,100 a year. You have to pay this every year. Now let us compare this to California. Because of Proposition 13, California property taxes are capped at 1%, and they grow very slowly. If you buy the $450,000 house in California, your property tax will be around $4,500. This means you pay $4,000 more per year in Texas. Over 10 years, you will pay a $40,000. You did not avoid paying tax, you just shifted it to your house. The thing about property tax is that it does not care if you lose your job, retire, or go broke. You have to pay Texas property tax. You have to pay Texas property tax every year. Know what happens to you because Texas property tax is a constant expense. Cost 2. Insurance has gone insane. Let me tell you something that should scare you if you are moving to Florida or Texas. In Florida, people are paying between $6,000 to $10,000 every year for home insurance. If you live in an area, you might be paying $12,000 or more. That's only if you can get insurance at all. Many big insurance companies have stopped offering coverage in Florida. Companies like State Farm, Farmers, and AAA are gone. Texas isn't much better in places like Houston or Corpus Christi. If you compare this to states like Ohio, the average home insurance is around $1,500 a year. In Pennsylvania, it's $1,200 a year. You might save $5,000 a year on state income tax in Florida. You are spending $8,000 more on insurance. That doesn't seem like a deal. You are just giving your tax savings to an insurance company of the government. The worst part is that insurance costs can go up every year. There is no limit to how much you might have to pay. It's like a ticking time bomb. You have no protection. Cost 3. Your paycheck shrinks too. The part that most people completely ignore is that jobs in states with taxes pay a lot less money. A lot less money. To understand this, we should look at numbers. For example, a software engineer in San Francisco gets paid $150,000. The same job in Austin pays $110,000. You might think that is okay because there is no state tax in Texas, so you will still have a lot of money. Let us actually do the math. California charges 9% state tax on that income. So your $150,000 becomes around $136,000 after state tax. In Texas, you get to keep the $110,000 before federal tax. After federal tax, you are taking home about $85,000. In California, you are taking home about $105,000. You are making $20,000 less per year in the state with no state tax. We have not even talked about how much money you can make in the long term. States with taxes have more jobs and more industries. They also have pay raises and faster promotions. Over 20 years, the difference in how money you can make becomes really big, about $500,000 or more. You cannot avoid paying a lot of taxes by taking a lower salary. Jobs in low-tax states like Texas pay a lot more money than jobs in high-tax states like California. Software engineer jobs in low-tax states pay a lot more money than software engineer jobs in high-tax states. The difference in pay is about $20,000 per year. The difference in pay for software engineer jobs in low-tax states and high-tax states is about $20,000 per year. CUST4 you pay for everything out of pocket. Low-tax states do not fund infrastructure in the way that high-tax states do. So who pays for this? You do. Let me explain this to you. Public transit in Texas is basically non-existent outside of the downtown areas. You need to have a car to get around. Actually, if you have a family, you need to have 2 cars. This means you have to pay for a lot of things. That is $500 per month for a car payment, $250 per month for insurance for each car, and $400 per month for gas because everything is really apart. Then there are tolls everywhere. So the total cost is $1,900 per month just to be able to move. Now let's talk about schools. Many low-tax states have schools that are not funded very well, so parents who are class have to send their kids to private school. The cost of this is $12,000 to $25,000 per kid per year. In states like Massachusetts or New Jersey, the public schools are really good. They are free because the taxes paid for them. You are not avoiding costs when you live in a low-tax state. You are just paying companies of the government. Often you are paying even more for things in low-tax states than you would in high-tax states. So here's the truth most financial experts won't tell you. Low-tax states aren't a scam. They're not a guaranteed win either, because taxes are one number. What really matters is this: cost of living asterisk. Let me show you the real formula. Your financial freedom is income minus state tax, minus property tax, minus insurance, minus transportation, minus childcare, minus healthcare, minus opportunity cost. What's left? That's your freedom number. And here's what shocks people. Sometimes the high-tax state leaves you with cash. A teacher making $60,000 in Colorado might have disposable income than an accountant making $85,000 in Miami. Same hours, different structure. Now here's where it gets wild. Some low-tax states are starting to have problems. Florida's insurance market is in trouble. Texas power grid keeps failing. Tennessee housing costs are going up fast. Meanwhile, some high-tax states are losing many people. They're cutting taxes and improving services just to compete. The game is changing fast. The state that looks cheap today might be expensive tomorrow. So if you're serious about moving, you need to stop looking at tax brackets and start looking at lifetime cost. Because the 5 states that will actually save you money in 2030 aren't the ones you think. Once you see which states are quietly building long-term stability, affordable living, and real opportunity, you'll realize the move you were about to make could have been the biggest financial mistake of your life.